Join me as I try to invest like Warren Buffett using just 3 simple rules. Can I turn a small amount into a fortune? Investing like Warren Buffett. It's a topic that gets a lot of people excited, and for good reason. The man has built a fortune over the years, and his investment strategies have been studied by millions. But what if I told you that you don't need a PhD in finance to invest like Warren Buffett? In fact, you can master his investment approach using just 3 easy rules. One of the biggest challenges novice investors face when trying to emulate Buffett's investment strategies is that they often feel overwhelmed by the sheer amount of information out there. They read books, articles, and blogs, but at the end of the day, they're still not sure what to do with their hard-earned money. Another challenge is that they lack the discipline to stick to their investment plan. They get caught up in the emotions of the market, and before they know it, they're making impulsive decisions that end up costing them dearly. A third challenge is that they don't have a clear understanding of their own risk tolerance. They take on too much risk or not enough, and as a result, they end up losing money or missing out on potential gains. And finally, many novice investors try to time the market, thinking they can predict what's going to happen next. But as we all know, no one can consistently time the market, and those who try usually end up getting burned. So, what are the 3 simple rules that Buffett follows? Well, the first rule is to invest in businesses that have a strong competitive advantage. This means looking for companies with a unique product or service that sets them apart from the competition. The second rule is to invest at a price that makes sense. This means doing your due diligence and making sure you're not overpaying for a stock. And the third rule is to have a long-term perspective. This means avoiding the temptation to buy and sell stocks based on short-term market fluctuations and instead focusing on the underlying fundamentals of the business. Let me give you an example of how these rules work in practice. Take Coca-Cola, for instance. This is a company that has a strong competitive advantage thanks to its iconic brand and massive distribution network. And if you had invested in Coca-Cola 10 years ago, you would have gotten a decent return, especially if you had bought the stock at a reasonable price. But what's more important is that you would have also gotten a company with a proven track record and a strong management team. And because you had a long-term perspective, you would have been able to ride out any short-term market fluctuations and come out on top. There's a powerful anecdote from Buffett's career that illustrates the effectiveness of these 3 rules in action. Back in the 1970s, Buffett invested in a company called Candies, a small confectionery business in California. At the time, the company was struggling, but Buffett saw an opportunity to buy the business at a low price and turn it around. And that's exactly what he did. He invested in the company, and over time, it started to generate huge profits. The key takeaway from this story is that Buffett didn't try to time the market or buy and sell stocks based on short-term fluctuations. Instead, he focused on the underlying fundamentals of the business and waited for the market to recognize its true value. In summary, the 3 rules to invest like Warren Buffett are to invest in businesses with a strong competitive advantage, invest at a price that makes sense, and have a long-term perspective. By following these rules, you can avoid the common pitfalls that novice investors fall into and achieve long-term investment success. Thanks for watching, and if you have any thoughts on these 3 rules, please leave them in the comments below. And if you want to learn more about advanced investment strategies, be sure to check out our next video.